What are the potential risks that a real estate investor could face? Welcome to today's episode. My name is wendyojiro. I'm a realtor based in Nairobi. And in today's video, I'm going to be sharing the risks that you could potentially face when you invest in real estate. Investment has risk in it inherently. So whatever you're investing in, there are risks that are involved. It's just good to know what are the potential risks that you could face, and then you can adequately prepare for them. So we'll look at some of the risks that you face as you invest in the real estate market in Nairobi. I will start with the off-plan market, which is a market I majorly specialize in. Off-plan market gives you a lot of upside, but you have to know that it is a risky investment. And so it is an investment you should consider if you have a high tolerance for risk. If your tolerance for risk is low, then off-plan investment might not be quite the thing for you. So when you're investing in off-plan, what are the risks that you should be aware of so that you can adequately prepare for them? So one is in delay in constructions. Sometimes off-plan projects take longer than planned. This could be either due to external factors which the developer cannot control, or it could be poor planning on the part of the developer. Maybe they don't have enough finances, or maybe they've not planned their work well, or there's poor uptake of the property, so the developer is not able to complete the project as early as they would have liked. So the best way to mitigate this risk is to work with professionals so that you make sure that you choose projects that have a high probability of being delivered on time. When you choose a developer who has a reputation to keep, who is liquid, who has enough experience and expertise, then you significantly lower the risk of delayed or incomplete projects. The other risk that you face with off-plan is that sometimes your expectation will not match reality, because the renders always look so good, and maybe you're abroad and you don't have someone on the ground to help you choose a unit. So you might find that the property where you bought a unit, it has very good units, but you are given the dark unit, or you are given a unit with a bad view. So it's very important that you take the time to properly understand what exactly you're buying into, and to have somebody on the ground who's guiding you through to find out, how is the light coming into your house? What is the view? Have you chosen the best layout for yourself? Ask more questions when it comes to off-plan, so that you don't have the risk of buying something that you will not be satisfied with or falls short of your expectations. The next risk that we face now, generally in the real estate market, is market risk. We are facing many changes daily, locally and globally, that will affect the valuation of your property and will also affect the rental prices. So rental prices keep fluctuating because it depends on the economy. And if anything happens to disrupt the market, that could be foreseen or unforeseen, whether it's interest rates, whether it's change in demographics. Like right now, we are seeing a huge change in demographics. There's a change in how we are working. People never used to work remotely. Now they work remotely. What does that mean for the commercial space? People love convenience. What does that mean for the bigger malls? People are going for the day-to-day, they're going to the smaller malls that are closer to them. So as an investor, you have to think very broadly that the market will continue to change. And you have to be constantly in touch with the market so that you know, okay, what are the risks? What am I potentially going to face in the coming years with this property? And then you can decide to either diversify, you can choose to exit and sell, you can properly adapt to the market when you can foresee those changes. The second risk you face as an investor in real estate is that this is not a liquid investment. It is not like when you have stocks or you have money in the MMF, where you will send an email and then your investment banker will have your money ready in 2 or 3 days. Real estate needs time. If you quickly need money, then you are at a high risk, because real estate, you don't sell it in days. Sometimes it takes months and sometimes years. So when you put in a significant amount of your money in real estate, make sure that it is an amount of money that you will not need in the near future. And also know that when you have invested into a property, it significantly affects your liquidity. So that is a risk you'll face. You'll be way less liquid, and in the event you need money in a short period of time, you will not be able to get back your money. And most importantly, if you sell at the wrong time due to time pressures, then you will lose value on your money. So be aware of this risk as an investor. The third risk that we face when you are investing in real estate is regulation. The laws of a country are always changing, always evolving, whether it comes to zoning, when it comes to tax, when things are always changing. So you have to know, what will I face? Maybe you bought an apartment or you bought a townhouse when the zoning was only townhouse. Let's say like some people in Kileleshwa, some people in Westlands. And then now the zoning changes and your neighbor buys the land and builds a 25-floor building. What does that mean for you? So in terms of regulation, you always have to be aware, because the laws are constantly changing and you have to know, how is this going to affect me? As a real estate investor, you always have to be in the know of that. The next risk that you face is tenant risk. When you buy a property to rent it out, ultimately you're going to be dealing with tenants for the lifetime of that property. There is a lot of uncertainty that comes with that. Sometimes within the tenant's control and sometimes not. So this could be they're paying late, they're not able to pay, they're not of good character. You might be harboring a criminal and you don't know, and then now DCI comes and starts tracking your payment. So tenant risk is a real thing. Make sure you screen your tenants properly. Make sure you have proper identification of anybody that stays in your property. And this is important for both residential and commercial. You never know who you're dealing with. And when you're dealing with people, it comes with a lot of uncertainty. So this is a risk you need to be aware of and adequately prepare for it as an investor. The other risk that you will face during the life cycle of your property is management of the property. When you buy a property, you're not sure who your neighbors will be. You're not sure how well the property will be maintained. You're not sure if there are any structural issues. So you need to closely look at every investment you buy. Know what is the likelihood of this place being well maintained. What is the quality of my neighbors around? When you buy an apartment, look at it and look, is this a place that will likely grow mold in the future? If there's poor ventilation, not enough sunlight, it might look nice when it's new, but down the line, you will get issues that can grow into much bigger issues. So maintenance is something, as a real estate investor, should always be at the back of your mind, because it is a real thing that you will face. The other thing is high competition. The market is growing, and with every growing market comes very high supply, very high competition. So you always have to stay competitive so that you avoid vacancies, because when you have a vacancy, your income goes low and then it affects your cash flows. So when it comes to residential real estate, the general rule is that the smaller the unit, the higher the income. However, the downside of that is the smaller the unit, the higher the turnover. So that's a risk you face. So studio has higher turnover than one bed. One bed has higher turnover than two bed. Two bed has higher turnover than three bed. So you need to be aware that the smaller your unit, the higher the frequency of turnover will be. There'll be some vacancies in between, and there'll be some loss of income in between. Because let's say somebody who has a 3-bedroom tenant Your 3-bedroom tenant could stay in your apartment for 10 years because they have more stability and they've put more thought into the process of renting your apartment. But a studio might be a younger person with more flexibility and they'll move faster. So keep vacancy risk in mind as you invest in real estate. The other risk that you face is if you have taken a loan for the property, interest rates fluctuate and they fluctuate without notice. Kenya currently we're dealing with double-digit mortgage rates, and I think this will continue to go higher for the foreseeable future. So if you're buying a property and maybe you're on a 15-year mortgage, do know that you stand the risk of your interest rate going higher without your income on the property going higher at an equal pace. So this is something that you need to adequately prepare for. So these are some of the risks that you should be aware of as you invest. However, as you know, real estate remains a solid investment that will serve you for the longer term. All you need to do is to plan, research, and prepare adequately for these potential challenges. Then you will be ready to face the market and to minimize any downside that you may have. Another risk that you might potentially face is environmental risks, acts of God like floods. When a flood happens, what happens to your property? If you're in a flood prone area, you stand the risk of fire. Do you have insurance? If you're having a fire in your building, do you have adequate insurance? You need to prepare well for that. You should also know that in the life cycle of your property, you might face litigation from your tenant, or you might be the one to take your tenant to court. So are you ready for that? This happens a lot in commercial real estate. You might get into trouble with the law, or you might need to do something that needs the intervention of the government. So these are the things that you need to think about generally when you're a landlord. But if you have you've properly thought through these risks in advance, then you'll be better able to prepare for them. You'll be able to plan, research, make sure you work with professionals, and then in case these risks come to happen, then the downside will be minimized because you will have thought through potential solutions. So if you know anybody who could benefit from this video, please share it with them. If you have any questions regarding how to navigate investing in Nairobi, then you can reach out to me. I will share my contacts in the details below.